And hello, everyone. Welcome to our power scanning session. It is February the 15th, one day after Valentine's Day. My name is Daniel, and I will be your moderator throughout the session. And once again, today we will be on the lookout for the most promising swing trading setups for the week and the week ahead. But before we get into all of this, let me ask you guys, where are you calling in from? Who do we have in the room today? I myself, I'm greeting you once again from our beautiful office here in Montreal. Yes, I'm back. I was in Brazil for the last couple of days, almost 2 weeks. I made it back yesterday. This is also the reason why yesterday the session needed to be rescheduled because I was en route, so to say, back to Montreal. It's been a very cold arrival here. It's minus 13 degrees centigrade. Quite a cold walk to my office, but I made it and I am ready to go with this session. But let me see, who do we have in the room today? Please put your location into the Q&A box. So we have Edda from Hamburg. Hey, Edda, how are you? Good to have you again. Lenny from New York City. Hey, Lenny, how's it going over there? I was in New York yesterday for a brief moment, which is where I landed, and I drove the car all the way to Montreal from New York, which was a fun drive. It's about 6 hours. Robert from Bavaria. Hey, Robert, how are you? Servus. Paula from New Jersey. Hey, Paula, how's it going? Benedicta from Bielefeld. Oh, Benedicta, welcome to our pro session. Thank you so much for coming. Brian from Ohio. Hey, Brian, how are you? It's nice to have you. And Lenny said, how do you adapt from the warmth of Brazil to frigid Montreal? For me, it's easy. I like both, the warm and the cold. And in the end, it's all a question of the mindset. You can make the best out of each condition. And Andreas says, hello from Mainz near Frankfurt. Hey, Andreas, how are you? Nice to have you. Well, thank you guys so much for sharing your location. Let's get started. So, what we will be doing today is we will be looking for what we call swing trades. So, a swing trade is not a day trade, which you may open and close within the same day. And it's also not a super long-term investment, which you may hold for multiple years or maybe for all your life. A swing trade is right in the middle of these two extremes. And you may say 1 to 20 weeks. It's not written in stone, but something along those dimensions is the duration of a swing trade. And what we will do today is we will use our Liquidity View scanner to find the most interesting swing trading setups, which may become relevant when the market reopens on Tuesday. Of course, tomorrow is President's Day, so the stock market will be closed tomorrow, but on Tuesday, it will reopen, and we're going to see what might become relevant for Tuesday in today's scanning session. And the idea is that this is something you can do not just on the weekend, but really after every trading day or before every trading day, which is something you can do on your own in just a couple of minutes. We call this the 13 minutes strategy. The 13 is not so important, but what is important is that this scanning process, once you get the hang of it, will only take a few minutes to identify what might become interesting for the next day. All right, so who are we, in fact? Who is this guy talking about the 13-minute strategy, about swing trading, about all these things? Well, my name is Daniel. And if you're joining us today for the very first time, I am one of the founders of tradingindicators.com. And in fact, together with Homa here in the middle, my partner in crime, we have built up trading indicators from the ground about 10 years ago. Quite a long time. And it's been quite a journey ever since. And about halfway throughout our journey, Niklas has joined our team as well. And together, we are the main players at Trading Indicators. And as our name suggests, we specialize on developing innovative trading indicators. This is our bread and butter. But this doesn't mean that we don't spread out. And one direction that we have spread out to is the development of what we call trading scanners. Especially for the stock market, trading scanners are absolutely essential. Why? Because there's so many stocks to trade. There are thousands of stocks. Our scanner scans through more than 5,000 symbols. It is impossible to go through all of these manually to see which one of those has the most promising setups. For this kind of work, what you need is a trading scanner. And one such trading scanner we will be using today in our session to find what has become of interest for the next week. All right. Having this said, guys, if you have any questions, please don't be shy. Put your question into the Q&A box, and we're going to get to those questions as we proceed through this webinar. And let me just quickly see if my audio is fine. Nicholas, if you can please confirm, is my audio fine? I see a message there that it's
Yeah, it's totally fine.
It's fine. Okay, perfect. All right, great. Okay, so let's continue. Perfect. I do, however, need to remind everyone that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance or really anything based on historical price data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, having this said, let me go through a couple of other housekeeping items. First off, what we will be doing today is to scan for interesting setups using our Liquidity View dashboard. Now, it is probably easiest if you would simply follow along and replicate the steps that we will be taking today. But you can only do this if you actually have access to our Liquidity View dashboard. In the off chance that you don't have access yet, you can sign up right now, here in this second, in this minute, for a 1-week free trial, which, first of all, will allow you to interactively do the same scans as we will do in just a couple of minutes. And secondly, it gives you a chance to really try out the dashboard to see what this is all about, how it works, how smoothly it runs, and what else might be possible with the dashboard. So if you're interested in signing up for a free trial, simply go to tradingindicators.com/view to sign up for this trial. And this will only take probably less than a minute to do so. Then you can log in and you can start scanning on your own. And of course, if you want to stick around, if you want to use the dashboard for more in this first week, then we have interesting monthly and yearly options as well. All right. Also, and I mention this every week, but it's just so important, we do have a fairly comprehensive, in fact, a really comprehensive bootcamp available, which explains 90%. I'm going to elaborate a little bit on this. 90% of the features of the dashboard in a very detailed manner. It's about 3 hours long. Why do I say 90%? Well, because our dashboard is a dashboard which is very much alive. It's very dynamic, and we constantly are adding new features to it. This is the reason why I said 90%, because we recorded this bootcamp about, let's say, 3 months ago, maybe 4 months ago. It is time to it is time for a new bootcamp where really everything will be covered. And this bootcamp will take place I believe in about 8 or 9 days. You definitely will be notified for a brand new live bootcamp. Of course, it will also be recorded where we will really cover 100% of all the features available in the dashboard. But if you're interested in the first 90%, check out this bootcamp here at tradingindicators.com/bootcamp. 2 more things. We do also have a Discord channel. Check it out at tradingindicators.com/Discord. Why do I say this? Because we want to build a trading community and an active trading community where everybody can post opinions and charts and ask questions. And we are using Discord to build this community. Check it out. Registration is completely free at tradingindicators.com/Discord. And lastly, we also have an ebook called The Power of Three, where we are detailing 3 of our most interesting setups that we frequently scan for. If you want to learn more about these setups and why they work and why we like them, go to this link down here, tradingindicators.com/power of three, to have a look at our ebook. It's completely free. And lastly, if you have any suggestions, any feedback, any requests, for example, for new symbols, new scanners, maybe new indicators, whatever it might be, don't hold back. Your feedback is what drives the further development of our dashboard. So the more the merrier. There's no bad feedback, and everything will be taken into account and discussed internally. And if it's possible to do it, oftentimes we will do it very quickly. So if you have any notes, please send it to us either in the Q&A box or by email. All right, now let's get into it. What has happened in the markets since we spoke the last time? Well, it's been an interesting week. Why is that? Let's check it out. So I'm going to switch over to our dashboard. There we go. This is our liquidity view dashboard. And we're going to start with the SPY. What is going on right now? Well, it's interesting to say the least. At least to me, I'm going to just quickly take off some of these annotations to have a bit of a clearer picture. Give me just 1 second. There we go. Okay. At least to me, it seems that we're kind of stalling out in this upwards trend. Would you agree with me? So if you were to draw a line from all the way down here, it rose very steeply, and then now we're kind of stalling out, and we're kind of nearing a high point here, slowly and slowly. So it's getting slower, and so that's two schools of thought. Somebody pointed out to me just about 2 hours ago that the VIX futures curve went from a contango formation to a backwardation formation, which could indicate that the market has become skeptical of what might happen here, that we may have seen a high point, at least for the interim, in the market, and we may see a deeper correction in the SPY. I am on the fence. I still think, and we've seen this many times before, especially with other symbols like gold, for example, that oftentimes it just takes a long time to really break above a key resistance level. This level here, that you can see this little green line here, is for sure a resistance level, and price just has a hard time getting above it. We may see a couple of additional attempts to really break it. But if we do break it, there might be a big move to the upside. That's option number one, and I personally am favoring this option. I'm still favoring this option to this point. Option number two is we will see a deeper correction heading into the second half of 2026. And if this happens, at the minimum, prices would come down to the support level here at 650, but maybe even a deeper correction all the way to 613. That's not out of the picture. I think we're not there yet. But just, a little flag to be raised that, hey, something seems to be stalling out. We definitely have lost some pace here in this upwards trend. This is very easy to see. What about the Qs? Let's check out the Qs. So the QQQ are also interesting, but for a different reason. So for the Qs, in fact, we've been in a sideways formation, some kind of consolidation formation since October last year. You can see it here. The all-time high was made at the end of October 2025. This high point has not been beaten since. Yeah, we came close to it all the way here at the end of January. We didn't make it quite. We bounced off this resistance level. You can see this little green line here quite sharply towards the middle, in between support down here and resistance up here. I personally think that this is an interesting formation. Prices have retraced nicely, and we do have a level 4 pullback on our trend radar indicator here. And on top of this, we do have, unlike the SPY was really nearby this resistance level. In the Qs, we have a bit further to go until we hit this resistance level. So from a swing trading point of view, this is more interesting to me because at least in this case, if we go towards the long direction, of course, the trend is up. So this is the only direction I will consider. At least there's still some ways to go, unlike the SPY, which is right at this level here. So gun to my head, if somebody's asked me, hey, Dan, you choose one, SPY or QQQ for the next swing trade, I probably would go with the Qs for a bounce off this level. But of course, we'll see what's going to happen. Also here, we've been in the sideways formation, but the trend is up. And as long as the trend is up, I believe that it is always more likely for a continuation of the trend rather than a break of the trend and a reversal to the downside. All right, what about the Russell, the IWM? All right, so you may know that one of my favorite setups to trade is called zone break retrace. And for those of you who are joining us today for the very first time, don't worry, I'm going to explain the setup a bit later. So what is this setup? Well, let's take a look. This is what we drew, I believe, either last scanning session or the week before. I'm not sure when it was, but we drew it definitely in the past. What has happened here? Well, the Russell, you can see it here, broke above this green line here. This is a resistance level. We finally broke above this resistance level. Prices initially went up. Then there were signs that, hey, this is weakening and we are coming down again. And oftentimes, the stopping point for this downwards move is exactly the former resistance level now acting as support. So we identified this as our likely entry zone, and then we may see another bounce to the upside. And this worked out picture perfect. But now, since then, we came up and a bit down again on Friday, but up again. If we come down once again to this entry level, I think this could be once again an interesting zone break retrace setup. These retraces can happen multiple times. And, at this point, it just becomes rinse and repeat, doing the same thing. We've been quite successful with some rinse and repeat setups like Marriott, for example, which has very similar ones in the past. Going long again, if prices come down a bit further. But right now, here, I would wait for prices to come down. Maybe you're going to see a level 3 pullback once again on trend radar, maybe even level 4. And this then could be an interesting long opportunity here in the Russell 2000. All right. What about gold? GLD. What's going on there? All right. So gold, of course, just like silver, had a sizable correction all the way from the high point here of 509 down to our, down to this low point here. And if you measure this out just for fun, I know we've done this in the past, but let me just do it one more time. This was a 16.94% correction to the downside. It sounds big, but what's surprising, and at least it was to me, look at what happened here at Trend Radar when we came down all the way to this level. Nothing, just a level 3 pullback. This is not even a level 4 pullback, which we saw many times in the past. This shows you how extended prices were in gold prior to this correction to the downside. And I used this chance to sell some puts. Right when prices came down here, they were very expensive. Volatility jumped up, made these puts expensive, a great moment to sell them in anticipation that this is just a correction and the overarching trend, which is definitely a long trend, is going to continue. So this worked out nicely. I closed this position a couple of days later when it went almost 80% in profit. I resold some puts, I believe, on Thursday it was, with a higher strike price. Once again, collecting premium. And also the idea here is that, okay, the overarching trend is going to continue in the interim. All right, so here I'm definitely bullish and more bullish on gold than I am on silver. You can see here clear, but I would say recovery from this correction to the downside. Let's look at silver. I mentioned silver doesn't look as bullish to me. Of course, also here, all the metals had this deep correction to the downside. 40% down from top here to bottom here. This was a 40% loss. Quite stunning. I did sell some puts back here on Jan 30th, which are more or less plus minus zero right now. I still have these puts. I didn't buy them back yet because silver did not recover as much as gold did. It was a bit of a recovery here, but then we came down again. It's a level 4 correction, only level 4, considering we lost 40%. Nonetheless, if you look at this price action here, it is not out of the books that we may see another leg further down. It may happen. I'm going to hold on to my puts, I think, in the interim. Silver prices will going to rise again, or at least not drop too much. And my gameplay here is for my puts, even if I get assigned, meaning even if I have to buy X number of shares because I get assigned the option contracts, I'm going to hold on to it, anticipating, okay, prices are going to at least reattempt to close some of these gaps here that we made, these down gaps, maybe even this one here. That's my game plan for silver, but it's not out of the question that we may see another leg further down here in SLV. All right, oil, United States Oil Fund, USO. What's going on here? Well, not much. I'm still waiting, and maybe I'm losing opportunities here, but I will patiently wait until we eventually will get to this 83 level here, and then I'm gonna look for short positions if the setup presents itself. But right now here in no man's land, I'm just gonna skip it. You can see it's fairly much sideways, up and down, up and down. Things get only really interesting here once we get to either of this extreme up here, 83, definitely looks more like we're going to get to this level first, or perhaps all the way down here at 60. Then you can do the contrarian trade, betting on the fact, hey, we're going to see a bounce off this level towards the middle in between support and resistance. Last couple of months ago, we called out this trade here, for example, when prices came all the way up to this resistance level here in June 2025. All right, and one last, Bitcoin. Bitcoin is very hard to read, I have to say. What is going on here? So I thought, well, first of all, what we see here, actually, it's hard to read, but on the other hand, it's also not that hard to read if you use different tools. It's a bit hard to read with what we see right now on the chart. We can see it here after this big move upwards. I thought this is going to be a three-wave correction. 1, 2, 3, with the end point somewhere around here. That was my prediction on 74. Didn't work out. This level did not hold. I had good hopes it would, because it was like a overlapping layer of support and resistance. Prices went further down. Now, what you could think now, okay, well, this level didn't hold. Maybe it's going to be the next one. But where's the next level? Well, it might be this one down here at 49,000. Maybe this former level here. It is possible. Why I'm saying maybe this is a bit too far of a retracement becomes clear if we use a different tool. Sometimes you can look at markets with different levels, different ways. So we love our technical levels, but sometimes, other insights might be interesting as well. So what if we did a Fibonacci analysis? How does this work? So the Fibonacci analysis, or the concept at least, says that, hey, after a big move up, let's say all the way from the low point here all the way to the top point, there will be some sort of a retracement. And oftentimes this retracement coincides with a key Fibonacci percentage level, such as this one, which I'm going to show you right now. So let me draw this in first here. So in TradingView, or on our chart here in our dashboard, you can click the Fib retracement tool, or Alt F if you like. From the low point, it works as follows. You go to the low point where the trend started, all the way to the high point, then you click again. All right, now I'm going to keep this here, this grid. I'm going to make this full screen. And what do we see here? Well, I'll just move this over. So this low point here, see this one here at 60,186. With which Fib level did this coincide? Well, if we go all the way here, what do we see? Oops, my mouse just stopped working. 61.8. And if you have read about Fib levels, looked up something on the internet, or maybe somebody talked about this, this is by far the most important Fib level. Everybody is citing this one, 61.8% retracement. This is what some people commonly see. Well, if you believe in this, and if you follow Fibs, well, then you may have a point here that, hey, this will be the end, or this was the end. This is never an exact science, so this goes to the neighborhood. This was the end of this correction. And we're going to see a recovery of this overarching long trend from this point on. So two schools of thought here. I personally like the second one better, because I have an open Bitcoin position. I have a subjective view on it. In fact, I added to my position when prices came down here. So I added to it. I thought it's a good moment after this big retracement here to add to a long position. And of course, the anticipation is a Bitcoin in the long run is going to recover and prices are going to go up again. And one may say, hey, with this Fib retracement here to 61.8%, this was the end of it. And now prices are going to recover. And if you look at the live market right now, of course, Bitcoin trades 24/7. What do we see? Well, we're at 68,000. So this could have been the low point here at 60,000. We'll see what's going to happen. All right, so this was the market review. And Niklas, do we have any questions right now?
Let me take a look, Daniel. Daniel, Brian's trying to use a 30% discount code, Flash30 on the checkout page. Does it still work?
Brian, I think it officially has expired, but Brian, send me an email afterwards at info@tradingindicators.com. And Niklas, please also put this one into the chat. Yeah. Well, let me see what we can do, Brian. Okay. With that one, thanks for pointing this out. I believe the discount, the promotion is at its end, but send me a note afterwards. Perfect. Alrighty. Okay. Any other questions? Let me just quickly see. Yeah, Paula, it might be sideways chop for especially the SPY, I would imagine. Okay, and what do the financials look like is asked here. I'm not sure what this question means exactly. Maybe elaborate a little bit on this. Okay, perfect. So, please continue putting your questions into the chat, and meanwhile, I will now continue of all my slides here because now we're gonna get to the nitty-gritty. We're gonna get to the point what we're all been waiting for. We're gonna scan for our favorite setups. And I thought today, let's tighten it up a little bit. Now, why not? We always have the same steps. Why do go through one setup at a time? Today, I'm gonna scan through all the setups at once. How's that? Just to simplify, because after all, we call this the 13-minute strategy. And if I just do one step at a time, it's kind of a slower process. Maybe we can speed it up a little bit and maybe a bit of a dashboard hack for all of you out there. So what we're going to be doing is we will scan for two setups, in fact, for three setups at once. Why not? So what are these three setups? First off, the first setup we're going to require for all the scans we're going to do, later on we're going to alternate a little bit, we're going to require that, hey, my symbol that I want to find needs to be absolutely, with no exception, needs to be in a sustained uptrend, in a long-term uptrend. That's a precondition. And in my view, the longer a trend has been going on, the more sustained it is, the more strong the trend is. That's number one. Secondly, as a trend trader, as a trader, we're going to be looking for long setups, first of all. Why? Because the market has a natural bias towards the upside. And we're going to take advantage of this bias and we're going to enter with the bias rather than going against it. So we're going to be looking for long setups. So uptrend, looking for long setups. But as a trend trader, not every moment to go long is good. Because if things are very expensive, like silver was a couple of weeks ago, or like gold was, when prices are very far away from the averages, from these little green lines here, maybe that's not such a great idea because then the risk of having a pullback or seeing a pullback is quite elevated. What we want to do is we want to wait for these pullback to happen first. And then we want to look for entries because then we're going to get in at a much better entry price. And if the trend is to continue, then we can profit from this. And we can use our trend radar indicator, the one down here, to scan exactly for these pullbacks. You see these little red patches here in our otherwise green area? These are the pullbacks that we can be scanning for, and we can find stocks which are currently in such a pullback state to see if this could be an interesting opportunity. But we're not going to do it blindly. What we also want to see is we want to see this pullback to coincide with a key support level, a technical level on your chart. If this happens, it's going to be our bounce setup. If we come down to key support, we are looking for a bounce off this level towards the middle in between support and resistance. All right, that's setup number one. So we trade this all the time. Many of our trades of the week, which we post in our newsletter, were based on exactly this setup. Okay, a bounce off support. But there's another bounce out there. It has a more complicated name, but technically it's also just a bounce setup. It's a bounce off resistance to the upside. You may say, huh? How's that possible? How can we bounce off resistance to the upside? Well, it is possible if resistance is broken prior to this. Look at this one here. The price broke above this resistance level. It came up a little bit. And at this point, look where resistance is. It's below price. And price is coming from above down to this former resistance level. And in this case, we call this setup the zone break retrace setup. It's really just also a bounce setup of resistance. Kind of the same thing, just a different name. We're betting on the fact that we're going to be bouncing off this level, this former resistance level, to the upside. Zone break retrace. What we're going to be doing now is we're going to scan for a traditional bounce setup, the one of support, and for the bounce of resistance at the same time. Why not? Let's keep it simple. All right. So how do we do this? Well, let me go back to our scanner. And one thing I actually forgot to do, Nicholas, Let me do this at the end. I forgot to review what we had found last week. Actually, it was quite a good week as well in terms of our picks. Maybe we can do this at the end. But for now, let's focus on the new setups right now. All right. So, what were our conditions? Condition number one, if you remember, we need to be in a sustained uptrend. And for this, we're going to be using our MA rush indicator. For example, here on the symbol Agilent. Look at the symbol here. Let me just hide everything else. There we go. You can see here that on this chart, we have these labels: bullish, bearish, bullish. These labels are always alternating, meaning after bearish, bullish needs to come. After bullish, bearish needs to come, and so forth and so forth. And now, depending on what the last label on your chart is, in this case, it's this one here, bullish, this determines what is the current trend direction. So in this case, our current trend direction is bullish. You can see it here. This is the last label on the chart. And if you go over to our scan and look at this column here, our MA rush column, which coincides with this indicator, we can see there's an upwards facing arrow in here. It means, we can also see it in the scanner. This symbol is bullish right now. And we can also see a number next to it, this number here, 80, which shows for how many candles, for how many trading days is the symbol in a bullish trend. In this case, 80. And if I were to count my candles back from the last one here all the way to this label, I would get to the number 80. 80 candles since we switched to bullish. All right, so how can we take advantage of this information on our scanner? Well, what we can do is we can use the filter. Do you see this little filter icon to the right, the column here? You can click on it. It's very similar to what you may see in Excel. And you get a couple of options to filter for. And we can, for example, say, okay, I want to see symbols which are currently bullish, and the switch to the bullish label happened more than 500 bars ago. You may say, what? Why 500? It's such an arbitrary number. You're right. It's probably somewhat arbitrary. But what I will achieve by having such a very strict criteria is I will read out symbols like this one here, which are bullish right now. Yes, we can see it here, but this is not a strong and established bullish trend. We just switched to bullish. There's nothing really established in this yet. I want to focus on symbols where this switch to bullish happened at least 500 bars ago. Because that means, okay, this trend is quite established right now. So I'm going to go here to MA Rush and select bullish more than 500 bars ago. Click. And now we can see off our 5,815 symbol. Currently, 815 symbols are bullish for more than 500 trading days. That's quite cool. It's quite a lot. Like this one here. Actually, let me go to this one. ABBV. You can see it here. Clearly in a bullish trend. And here the switch happened when? On December 2023. Yeah, exactly 534 candles or trading days ago. Perfect. That's criteria number one. We found all the bullish stocks, the ones that are bullish right now, because we want to enter long. We want to trade with a well-established trend. All right. What was filter criteria number two? Who remembers? Well, let me ask you otherwise. Would you enter long right now in this symbol, right here at this price? Here, at this level. I personally would not, because that doesn't fit my process. Why? Because prices didn't pull back. They pulled back here when prices were down here, but right now they're up again. I want to wait for a pullback. That's what we're looking for today. You don't necessarily, there's other scans in the dashboard where you don't need to wait for this, but for the scan we're looking for right now, for the setups that we are looking for right now, we want to wait for this pullback. We can find this pullback by looking at this trend radar indicator here. Right now it's all green. That's the level 0 pullback. There's no pullback there. We want to find stocks which currently have at least 3 red levels, or maybe like this one here at this point here, 4 red levels on February 11th for this stock. How can we find this? Well, back to our scanner. We're going to go to our pullback column right here, select the filter next to it, and select, okay, either level 3 or level 4. All right, nice. Now we're down to only 159 stocks. And if I click on one of them, like this one here, AEG, we can see, all right, AEG right now is in a level 4 pullback. It's a long-term uptrend. and a level 4 pullback. Great. All right. Another example. This one here. EIQ. Same thing. You can see it here. Long-term uptrend, long-term level 4 pullback on our trend radar. Would I go long this symbol right now? Now, this already looks much better, but I still need one more thing to happen. I need price to be near a key level, either a support level like this one down here, this reddish line, or a resistance level. We need to come from above to this level, because then we have an extra line of defense for this trade. Another thing that is in our favor to facilitate our forecasting that prices will continue in the upwards direction in the future. So how can we do this? Well, for this, we're going to use this indicator here, which is called Liquidity IQ. You can see this one here, which draws these levels, these levels onto our chart. You can see it here, these levels. That's the indicator we're going to leverage right now. And we're going to go to our scanner, here, and go to our Liquidity IQ setup column here in our scanner, and we'll select either a long bounce setup, which would mean prices need to be near a support level, or long break retrace, which means price needs to be near a resistance level and coming from the top towards this level. Once I do this, look at this. Only 13 stocks survived. Wow. That's pretty cool. And I do one last thing and then I'm done with my scanning process. And if I wouldn't talk so much, you could do this, I promise you, in less than 1 minute. I do one last thing. I like to sort by trend duration, allowing me to focus on the stocks first, which have been in an uptrend for the longest. So I click on this column here. Now you can see all these numbers here next to the upwards facing arrow. They're now sorted from highest to lowest. All right. And the first one that comes up is this one here. SANM, the Sanmina Corporation. Let's check it out. All right. So I'm going to open up my chart here. All right. And we can see, okay, great uptrend. We just came off of all-time highs here on Jan 22nd. Another retracement down to this key support level. And yes, this could be definitely an interesting opportunity for potentially a long trade. I have no idea what the stock does. That's the beauty about this process. You don't really need to know what the stock does. It's all about technicals. Being able to scan for these technical setups takes away a lot of these fundamental analysis, which you would need to do otherwise to identify, hey, what is this stock into? Is this a promising stock and so forth? This is eliminated by this. All right. So I do one more thing here. Let me just quickly enable my my expiration frequency. Okay, there we go. All right. So this is just this column here. I'm going to talk about this column in just a bit. Actually, maybe one more thing real quick. I'm going to disable this column here. We're not going to need it for now. Perfect. All right. So an interesting stock. Would I recommend it for the next week? It is definitely interesting. And yes, I like it. The only thing here which is a little bit of a flag here for me is that it is kind of stalled out at this level. What I prefer is an immediate bounce of this level. So we just got down to this level, and then oftentimes we see a bounce. Here, you can see prices have been at this level here for quite some time. For this reason, I think I'm going to skip it for next week, but I promise you, there will be many other opportunities for next week. So I'm going to skip this one just because we've been stalling out a little bit here for too long. Next one, Corporación América Airports. All right. This one here is in a long break retrace setup. Let's check it out. Also here, a nice uptrend. You can see it here. Yeah, a level 3 pullback on trend radar. And here we have a zone break retrace setup. We broke above resistance, our green level here. Prices initially went up and then they retraced down to this key resistance level. Yeah, I like it. Let me just go back a little bit. Yeah, look at this. Nice and stable uptrend. If I were to trade this, however, I probably would think about scaling in to a position right now at the current level, perhaps somewhere around this level here. Maybe wait for price to come down a little bit further, but would put my stop probably somewhere. Let me just go here, somewhere below this level here, just to give it another line of defense. Why do I say this? Because sometimes that quite often, if we have two levels very close by, like this level here and this level here, sometimes it's the second level which actually will make prices to bounce. So here, maybe scale in into a long position, then put your stop below this level, anticipating, okay, if you go below this level, maybe then it's going to be a deeper retracement. But I'm going to like it. I'm going to add this one to my short list. So I'm going to go here and create a new watch list for next week. There we go. Create weekly swing trades, colon 2025, 0 to 15. All right. And we're going to add this stock to our list. Oh, where did it go? Did I misspell it? Ah, what did I do? Oh, 2025. Yeah, maybe I'm still living in the past. You can see here I gave, where is it? Sorry. Where did it go? This one here. I need to rename this. You can rename your watch list, of course. It's 2026. Obviously, I was wondering, hey, why don't I see this watch list? Well, of course, it's not 2026 anymore. Rename, and a little trick. If you, maintain watch lists similar to what I do, and you want them to be ordered alphabetically, sorry, not alphabetically. They always will be ordered alphabetically, but you want them to be ordered by date as well. Make sure that whatever date you put first. You put first the year, then the month, and then the day. And by doing this, using this kind of a syntax here, you make sure that hey, these are ordered alphabetically in the right order. So here, weekly swing trades is, as you can see it here, are now listed here, and we can now add this symbol to our watch list. Now do one more thing. I will now also share this watch list with you guys using this button here. This is a button which I have as an administrator by, and I'm going to unshare the one from January 10th because that one went out of scope. Perfect. All right. So first symbol done. Nice. Moving on. UniCredit. All right. Let's check it out. Okay. All right. Let's check it out here. Also, here we have a level 3 pullback, 1, 2, 3 levels down on trend radar. Okay, we are in a strong uptrend. Let me just zoom this out a little bit. Look at this nice uptrend here. This is what I call a strong and sustained and stable uptrend. We broke above resistance here on December 2025, about 2 months ago. A nice move up, and then the retracement down with, you can see it here, a nice down gap. Look at this one here. This gap here. So here we have another factor which will play in our favor. Yes, first of all, we are approaching a key level from the top side. In this case, a former resistance level. We are in a long-term uptrend. We have a level 3 pullback, and there's a down gap. And down gaps, it sounds perhaps a bit counterintuitive. Down gaps are actually bullish setups because gaps on your chart, like this gap here, you can see this one here, gaps oftentimes get filled and tested. But here, for this gap, for this down gap to get filled, where prices need to go? Where do prices need to go? They need to go all the way up to this level here, to 44. They would need to move up. So another factor in our favor. I'm going to add this one also to our watch list. I like it. Nice. Celestica. We had Celestica a while back, not a while back, maybe, I believe, yes, last week or maybe the week before, as one of our interesting symbols. And look what happened here. I believe it was on our watch list last week, maybe 2 weeks ago. Prices came down to this key support level. This was back then, like on Feb 4th, came down, and then we bounced up this level beautifully to the upside, towards the middle, in between support and resistance, exactly as what we would expect from a swing trade. And now prices came down again, once again, to this entry level. This could be a rinse and repeat situation. Let's just redo the same setup. Let's go long again. Celestica, a stock which is in a nice long-term uptrend. You can see it here. Beautiful uptrend, bit of a retracement down to this level. Yes, I will add it once again to our list. Oops, Celestica to our watch list. Next, iShares MSCI Italy ETF. Yes, the Italian economy seems to be, at least stock-wise, seems to be booming. You can see it here. And we broke above resistance back in January 2026, a couple of weeks ago. All-time highs being made on Feb 11. Now the retracement with, also here, a nice gap to be filled. Although here, same thing. If I were to play this setup, as well. I'll be wary of this gap here. This is a good thing. A down gap is a bullish condition. I would put my stop probably below this level here. Why there? Same reasoning. If I were to, if there are two levels next to each other, like this one here and this one here, oftentimes it's the second one, which is the which will eventually hold. So maybe think about scaling into position when prices come closer to this level, scale into it, put your stop here in anticipation. This overarching long trend is going to continue. So I like this one as well for next week. All right, perfect. Alrighty, now we have another. This is just an ETF which follows the SPY. Yeah, very similar structure here as the SPY, the actual SPY ETF. I'm gonna skip this one because we can just basically just trade the SPY instead. Instead, I'm gonna go to this one here, TMFC, Motley Fool 100 Index. All right. So this is an index. If you go to the info box here, which trades, let me just see. The index was established in 2017, and it tracks the performance of the 100 largest, most liquid US companies. All right, as recommended by some analysts and news. Oh, yeah. So let's look at the trend here. What do we see? Well, oops. We see that also this one, of course, looks kind of similar to the SPY, of course. SPY is 500 companies. This is 100 companies, the largest ones in the US. But if you look at this one here, where are we? At key support. Now coming off this high point here on 73, now down to 68. Yeah, to me, an interesting long setup here as well. And if you believe that, okay, the stock market will not see a deeper correction, it's going to grind further upwards. Maybe slowly. Maybe we're going to see another bounce once we get to this level here. Then this could be also an interesting long trade here. I'm going to add this one to our list as well. And perhaps one more for next week. You can see how easy this is to look for these setups. What about this one here? LTL, the ProShares Ultra Communication Services. Yeah. All right. Another ETF. Kind of jumpy here at times, but nonetheless, very bullish. Yeah, long established uptrend, also hitting key support here. But just one thing to be aware of, to me, the Motley Fool, even also this communication services one, or even the SPY, or if you were to trade the GXLC here, they all have similar patterns. They all look similar in the sense because they follow the major indices to some degree. So I personally would only pick one of these three because there's definitely some correlation, and you don't want to double dip or overextend yourself or take too much risk in basically taking the same trade just with different symbols. Just pick one or the other, the one that you perhaps like the best. But nonetheless, also the LTL here is an interesting technical setup, a bounce setup after a level 4 pullback. So I'm going to add this one as well to our list, but I would only trade one of these two, either the TMFC or the LTL, or perhaps if you're looking at the GXLC, perhaps that one, but not all three of them at once. All right, so that's interesting. There's some other ones here. Maybe one more to be pointed out is this one here, Citigroup, also of interest. A bigger drop here. You can see it here, but a stock which definitely is in a long-term uptrend. Earnings are coming up only in March, so there's still some time to go. Nice drop down to the downside here, right to this key support level, even a bit further down. Potentially also Citigroup could be an interesting long play. I'm going to add this one as well to our list. All right. Okay, so now we have a first nice batch of symbols found for next week when the market opens. But let me show you one more trick or one more little hack with the dashboard. Let's revisit real quick our conditions that we used. So long-term bullish for at least 500 trading days. That's fine. We're going to keep it the way it is. Long break retrace setup and long bounce setup. Perfect. We're going to also keep this one the way it is. But sometimes it is too stringent to require the setup to be a level 4, level 3 pullback on trend radar. This one here. This is why at the end of my scanning process, I just gotta double check. Hey, what if I removed these two criteria? I'm gonna clear this filter. Let's do this. So currently we have 13 symbols. If I clear this, you'll see we have way more. 59. So 59 other symbols out there which are currently do not have a level 3 or level 4 pullback, such as, if you look here, alternation. Okay, this one here, AN, our first one here, alternation. Why didn't this qualify for a level 3 or level 4 pullback? Because right now, with the drop on Friday, right to the support level, you can see it here, we went actually to level 5, 1, 2, 3, everything red here on Trend Radar. Nonetheless, this is an interesting one. Yeah, once again, for a bounce off this support level. So I'm going to add this one to our list. I like it. All right. Northeast Bank, zone break retrace, but too shallow right now. I agree. It's only level 1 pullback here on Trend Radar. Here we're going to wait. If we come down to this level, maybe in a week or two, we're going to revisit. But for now, this drawback, this pullback is too shallow for my taste. Rider system, zone break retrace, but then we went up again. We're still in the vicinity of this former resistance level, but no pullback at all on Trend Radar. Skip it too. We're too far away. And there's one more I wanted to point out. Steel Dynamics, STLD. I like it. Only level 2 pullback, you can see it here. But here, I like the fact that this is a very steady, strongly trending stock. Look at this one here. Beautifully trending upwards. We do have a gap here, which is screaming to get filled. And I believe we might, we're coming down closer to this level down here. Right now, up here, I wouldn't enter. It's too pricey. But if you come down to the 183, 180 level, this could become a very interesting long opportunity. But here we have to be a bit patient. So let's observe it next week. Maybe we're going to come down to this entry level here, and then we could potentially enter also long here in this particular stock. So I'm going to add this one as well to our watch list for the next week. All right, so you can see hopefully how easy it is to find these setups. We can discuss all of them, of course, but nonetheless, it's a straightforward process. And if I wouldn't talk so much, this can be done really, really quick. So before we get to your questions, let me revisit what have we found so far on our watch list. All right, so I'm going to go to my watch list here. Last one here. We have 9 symbols. Pretty good. Let's go through these ones one by one real quick, just to recap, and then we're going to get to your questions. All right, first one, alternation. Yeah, I like it for a bounce off this level. It's a bit of a volatile, so you can see it here. A bit jumpy, but nonetheless, to me, it looks like we may be jumping off this level here. I'll probably put my stop somewhere around this level here. So if this comes down a bit further, all right. But I do like it for next week. So let's go here. I'm going to add a new screenshot of the current setup and move on. All right. Save. Done. Next one is Steel Dynamics. Yeah, here we need to wait for our entry zone, but nonetheless, if this materializes, this could be a very interesting setup. So also this one here. By the way, we looked at Steel Dynamics when prices were at 167 on Gen 10th. Yeah, what a trade it would have been. Went all the way up to like 200s. So once again, I'm going to add it to our list. All right. Done. Next, Corporación América Airports. Zone break retrace. I will probably not add a trade note here just because it's a bit volatile for my taste and I don't really know anything about this particular stock, so I'm going to skip this one. But it's a nice setup, but I think other ones are more interesting. UniCredit. All right. Yes, look at this nice uptrend. Zone break retrace. I will add it to our list. All right. Come on. There we go. Save and close it. Next one, Celestica Inc. Yeah, same thing. Very interesting one. If you believe in this company, even doing something with options, we get 9% premium for the 30 days option at the money, which is quite a lot. And if you hover now here, this means basically at 9% of the current stock prices would be $26. So if you were, we're going to expand on this in our session on Tuesday. If you were, let's say, to sell puts, let's say, if you want to collect premiums and you're betting on an uptrend to continue, you want to sell puts. That's one way to do it. You would collect a fairly high premium at the money with 30 days out. You get 20 what was it? $26 per share. So $2,600 basically, because every options contract is for 100 shares. You get $2,600 booked into your account. This essentially means that if prices go up, you're just going to keep the premium perfect. If prices go sideways, you're going to keep the premium. And even if prices go down all the way down to like $26 lower than the current price, to like 54, let's say, here, you're still in profit. Yeah, only below 54 you would lose on that trade. This is possible because the options premium are quite high here. All right, so I do like this one. I'm going to add it to our list. All right, nice. There we go. Save. Okay, EWI. All right. So EWI, look, contrast this one. Here, the EWI, 2.47% options premium. Much, much less. So here it would make more sense to potentially buy options than to sell them. Yeah, I like it for an entry. If prices come down a bit closer here, or just invest into this one outright, I like it for a continuation of this uptrend here in this MSCI ETF for Italy. All right. Perfect. And adding it here to our list. All right. Now we're going to make a choice. I don't want to, I believe the Motley Fool 100 and the Pro shares, at least when I look at the chart, they look quite similar. So I would pick one or the other. Let's go with let's look at the charts here real quick. Which one has the more clean setup? This is Motley. And these are the Pro shares. Yeah, this is a bit too wavy here, too many gaps. I think I'm going to take this one here for a potential long entry of this support level. So I'm going to go here and I will edit. I'm going to skip LTL once we've done this. And there's one more to be considered, which is Citibank Group. I know all the bank stocks, they went down a little bit last week or the last couple of days. I still like it for a long entry here of this support level. I'm going to add it to our watch list as well. Perfect. Okay. I think it's a pretty nice selection of setups for the market when it opens on Tuesday.
Daniel,
Yes, Nicholas.
did we review last week's? Remember, you wanted me to remind you.
We have not yet reviewed it. Maybe real quick because we're already at the hour mark. But yeah, if we were to look at last week's stocks, what do we find here? So these were our 10 picks from last week. We had Capricorn Metals. Yeah, this one it's still a beautiful setup. It bounced off nicely off this level here, but then we had a bit of a gap on Friday. I still like it for a long entry. So if you're in the stock here, this could still be a very nice long trade here. UBS, yeah, it went a bit further down off this level here than I thought, and a bit of a recovery on Friday. I still like it for a long trade. So here, this went a little bit into the minus, but just by a couple of dollars. So no harm, no foul. SFR, beautiful bounce to the upside off this level here. So this one worked out nicely. Broadcom, yeah, also the bounce happened here. Now we're kind of back to where we were before. No harm, no foul here. The Russell 1000, not the Russell 2000. You can see we did bounce off this level here quite nicely towards the middle in between support and resistance. And then as the market went down, it came down again. I still like it for a long bounce here off the support level. Yeah, so here we came down again towards our original entry level. Customers Bancorp, yeah, pretty much the same where we were before. ALS Limited, nice bounce to the upside, then a bit of a retracement on Friday. I think the whole Australian market went down on Friday as a whole. Perseus Mining, nice bounce of former resistance to the upside. ProShares Ultra Silver, yeah, this one here pretty much at status quo where we were last week because silver is kind of stalling out. So here, this was also the one where we said at your own risk. That's a risky one. Yeah. And then our gold miners, that one worked out really nicely. Entry here and a nice bounce to the upside. So overall, I believe a positive outcome. Some really good trades, some that went slightly in the minus and some that were at break even. So overall, I'd say not our best week, but a decent week at least in terms of our picks. And hopefully this week's picks will be more spot on. All right, Nicholas, any questions that we have?
Yeah, could you please look at Citicore?
Citicore, yes.
Symbol C.
Oh, we just had this.
Oh, okay. And we have a question here.
Yeah.
What's your opinion to sell Bitcoin put at 60,000?
Wow, I didn't even know you can sell. Can you sell Bitcoin puts? Is that something? Um, which symbol would you do this with, out of curiosity? I would need to look at the heat index and see how expensive the puts are. Which symbol would that be? Then we can perhaps check it out.
Okay. And then David says, the market's recently had some melt up and down days. What are some indications or indicators you'd use to detect the beginning of these types of days? So days where there's going to be a big move up or down.
Uh, that's See, what we do is we look at prices to go down to technical levels. So, and looking for a bounce. And sometimes you can see with the junior miners, for example, as prices came down to a technical level, that we can often see a quick acceleration to the upside. Like you can see it here, it jumped up really nicely. It's much harder when prices are, let's say, up here, overextended, just rising, rising, rising. It's very hard to time when that correction to the downside will be. Why? Because there's no level there. This is uncharted territory. So that's harder. And this is also why I don't enter at these levels up here, because I just assume eventually it's going to come. I don't know when, but I don't want to take the risk of a correction. So we are waiting for a pullback to a technical level. And if this coincides with a strong uptrend, maybe even something we can also look here, which is a liquidity capture setup. Just 1 second, we just enable this column. There's so many columns in here, and the bootcamp will explain all of them. Just quickly, 1 second. Take this one out. So I'll make some real estate on our chart. There we go. Oops. These ones. Okay. What you can also do is this scan. So long-term bullish, and we had a liquidity capture, let's say, at support at the current candle. Let's just have a quick look here. What? Like this one here. Heidelberg Materials. All right. A German stock. It doesn't matter where it is. So you can see long-term uptrend. Big correction here. We fell all the way down to the support level. And prices stopped here magically. It's not magically because that level has significance. And look here at the last two candles we had. Oops, the label is missing. Just enable it real quick. Yeah. At the last candle, we had a liquidity capture event. When this happens, sometimes, not always, of course, we may see a quick response of the market to the upside. So this can be an accelerator because for some reason the volume of this candle was very high, abnormally high, as it approached this level here. And sometimes you see a quick bounce of this level when this happened with the last candle. So that's another indication that you could use.
Thank you. And Gary, those are three higher time frame moving averages. I'm putting a link in the chat, tradingindicators.com/bootcamp, where this is all explained. It's our MA rush indicator, basically higher time frame momentum, right, Daniel?
Yeah, Gary's asking for these lines here. Yeah, exactly. These are average pricing from higher time frames. And I like to use these lines to gauge for multiple reasons, but to see how extended prices are. I'm just going to use my example of gold or silver again. Let's use silver just because it's so clear. Look at this one here. When you see something like this, where prices is really far away from these average lines, you see this one here? To me, this is super risky to enter. And we want forever. Hey, silver is a risky play because we're so far away from the averages. And the correction will be coming. And if it comes, oftentimes the correction goes right into the middle zone here to these lines, basically a reversion to the mean. That's what it means. So I use these lines to gauge, okay, how extended are we? This could be a warning sign for me to enter long because I don't like to enter at these levels. And if we actually getting down to these levels, the prices in between these lines, and this could be an opportunity. Hey, now we're at the mean, we're on a bullish trend. Maybe prices are gonna continue grinding higher again. We're gonna get out of this mean to the upside again.
Thank you. And is there any correlation between the heat index and volatility indicator in the
Yeah,
scan?
that's a good point, Ed. We will most likely retire this indication here because the heat index, where is
Ed
it?
is making a point that, for example, the symbol AN has a heat index of 1.91 and the volatility says high.
Yeah, exactly. So the volatility indicator here, this one here, or the scan, we did this. It's an old column that we have. We don't really use it now anymore. It's derived only from price data. It's just producing how choppy price data is to come up with some volatility indication. It doesn't have anything to do with actual options pricing. It's derived solely from price data, which makes it from historical price data, which makes it inaccurate. This heat index is actually derived from options pricing, which makes it much more accurate. So this is one of the reasons why we most likely will retire this column, because this one is more accurate. I hope this explains it. And by the way, if there's anyone out there using this volatility column, let me know before we retire it. Maybe if you're in the room right now, if you're using it, and let me know how you use it and how it's been working out for you. Yeah.
Thanks, Daniel. And Benedicta wants to know, how do you determine when to close a swing trade? Do you use formations, measured moves, Fibonacci's? For example, Benedicta is still holding Caterpillar.
Yeah.
To her understanding, technically the aim is reached, but it looks like it's going to continue.
I probably would have closed it. I mean, a trade like this, Caterpillar, where it's clearly already in the profit, I would definitely ring the register, at least to some degree. Hey, book some profits, maybe let a small position continue to ride. And what you could do is just use a trading stop of some sort, because there's no technical levels up here. It's really hard to time your exit. In this case, I would look for these local swing lows like this one here. Maybe put your stop loss here for a swing low, or maybe another swing low is made down the road. Use these ones here as your trading stop. Only, of course, trail your stop upwards, never down. Then continue riding this trend. But I personally would probably already close out that trade. Yeah, even though it's a nice, beautiful run up here.
Thank you. And can you please look at UBS? And for everybody, just when you post a symbol request, please don't use anonymous, because then we can't track if it's the same person requesting like 10 symbols.
Yeah. I still like UBS. It came down a bit further below this level, but not too far. We're still in the vicinity. Here, what you need to think of is these are always levels. Oh, sorry, zones, not lines in the sand. So to me, it's still a level 4 pullback off trend radar. Yeah, I mean, I would still be in this trade of UBS if you're in it. I think it's still an interesting one. And Citibank has a similar formation. All the bank stocks. Let me just look at JP Morgan real quick. What is JP Morgan doing? Probably pulled back as well. Yeah. So all the bank stocks pulled back to some degree. Also, JP Morgan actually is really interesting for a nice bounce here. Um, yeah, I would stay in with it personally. Mhm.
Thank you. And for our last symbol request here, Daniel, can you please just compare Uber and Lyft?
Uber and Lyft comparing. Okay, let's put up Uber here. Okay. All right. Uber is bullish for 681 trading days, but we did lose key support here. Yeah. Okay. Let me just take the indicators out for a second. Actually, let's just look at this one here. Okay. Uber still bullish, but struggling now. Really deep pull. Like, see how all levels of trend radar are red here. We lost support. So kind of mixed feeling about this one. I would sense that A price are probably going to come down to this level here, 60, and then maybe look for longs and Lyft. All right. Yeah, Lyft. At least Lyft now is at a technical level. And we had a gap here. Yeah, I mean, if I had to pick one, I guess Lyft is also bullish for 191 trading days. Yeah, maybe we're going to see a bounce off this level towards the upside. I mean, both sets are not completely ideal, but I think Lyft might be the better play here, because Uber is not at a technical level right now. Here, at least we have some ammunition in our hand. Hey, this level might hold. Uber, on the other hand, just one more time going back here, is kind of a no man's land. We lost this level here, and the next level probably is this one. That's my take on the two. All right. Yeah, I don't know how to trade Bitcoin options, honestly. Maybe whoever asked that question, send me the symbol through which you would do it, and we can look at options pricing maybe next time. All right.
Okay.
Yeah.
I was just gonna say, Daniel, just to remember to I wasn't watching if you compared it with Lyft.
Oh yeah, it's done.
Okay.
Yeah. Okay. All right, guys. Perfect. Okay, great. This brings me to my last slide. So, um, quick reminder, if you want to try out our great dashboard, go to tradingindicators.com/view. You get a full week of a free trial, and afterwards you have interesting monthly and yearly option. The link is in the chat. And if there was a question which was overlooked, you can always reach out to us via our homepage, tradingindicators.com. On there, click on support, then contact. This will open up a contact form. Put your question into this contact form, submit it, and it will come straight to my inbox, and I will answer every question personally. It may take a couple of hours, maybe a day, depending on how many questions are coming in, but I make it a point to really answer to every single request. All right, guys. With this, I wish you all a great Sunday afternoon. Get some energy. Remember, the markets are closed tomorrow, so perhaps a bit more of a relaxing start into the week. And then we're gonna see you all at our lunch and learn session on Tuesday at noon. Can't wait for this one. All right, guys. Until then, have a nice day. Bye bye.